Oh, what a day, what a day. But it's about that time of day again, though, isn't it, folks? It's Thursday afternoon. It's March 21st. My name is Joseph, and this, of course, is your nightly newsletter. You know, I help new traders find consistent, reliable, dependable, profitable opportunities using a simple 3-step trading strategy that we teach and trade together every morning in our trade room. But my job tonight is a little bit different. My job tonight is to identify the best of the best opportunities we see setting up for tomorrow, Friday's trading session. And we're going to grab oil, S&P, Nasdaq, gold, and euro in tonight's video. I'm going to jump in here to the oil market here first this evening. Oil's back to its old tricks again. Get a nice big strong bull market yesterday, but of course today we are running sideways right inside a trading range, right? Couple big clues in this chart right now. The bullish momentum yesterday tells me we know that buyers are trying to buy nice and low right now. That trading range tells me to focus on buying opportunities down below that range. There are ultimately two locations I'm focused on trading tomorrow on oil. One is the battle zone below the range, and the other is the battle zone above the range. But the nice thing about range-bound markets is they give us a chance here to not only buy low, but sell high, but also look for potential breakouts, right? Breakouts through the highs or breakouts through those lows. I'm going to talk about how we can buy low and sell high, but also how we can look for those breakouts tomorrow morning as well. I'm going to dig into this in just a moment here, so stay tuned. Over on the S&P tonight, boy, the S&P tonight, what a change of events, right? We talked about that finishing move lower in last night's newsletter, and oh boy, one hell of a move today on the S&P. Now, if I've said this once, I've said it 1,000 times. Anytime we see a market go this far, this quickly in one session, what usually happens? We usually end up seeing a range-bound market the following day. I'm anticipating a range-bound market tomorrow here on the S&P. The plan will be very, very similar to oil. We got that nice big bull momentum up into that range. That tells me look for buying opportunities below the low of that range. And also, I'm keeping an eye out for breakout opportunities up above the top of that range. I'll tell you, that 3,000 big round number is starting to look kind of likely here before the half of the year breaks. I'm going to go into all the details, though, here on this S&P, both long and short, for tomorrow. Over on the Nasdaq tonight, Nasdaq is very similar to its older sibling, the S&P, or maybe it's a younger sibling for all I know. Doesn't matter. Nasdaq is extremely bullish right now, and much like the S&P, anytime we see this much movement in one session, we're usually going to see a bit of a range-bound market. Now, I've got some big clues on this chart right now. I've got a spike in channel. I've got a trading range. I got a beautiful hidden channel here. I want to buy some pullbacks right now, and I've got some great locations I'm watching for pullbacks, and 3, maybe 4 different buy patterns I'm going to be watching here for the NQ. If you're an NQ trader, right, you definitely want to stick around for that portion of tonight's video. And then how about some gold here tonight? I got to tell you, I don't look at a chart very often and think, what the hell is going on here? But this is definitely what I thought the first time I saw gold this morning. We, of course, definitely had a wild and crazy session here on gold. It's been par for the course, though, right? Big move down, big move up, big move back down. All kidding aside, though, there's one really big clue on this chart right now, and I'll give you a hint. It's not what happened, it's what didn't happen. I think when you look at this gold here, we're going to dig into this a lot deeper here as we go into the video tonight, but I think on this gold, it's what didn't happen, right, that I think is really the biggest clue, right? I'll give you a bit of a spoiler. I'm looking for this thing going right back up to retest those highs here, right, from earlier on in the session. The problem is that we've got this bearishness going lower here. And you know me, right? Anytime I'm going against the short-term momentum, I always have a couple key patterns I'm looking for here to be that buyer. So I'm going to jump into that gold here in a moment. I think we're going back up to retest those highs, but I'll show you what I'm looking for both sides of that market. And again, it's what we didn't see. That was the key focus here on gold, because when you look at the euro, right, the euro's up next here, right, over on the euro got more than what gold was asking for. And I'm going to talk more about that here tonight. But the euro is a great example of the gold wanted to get done what the euro got done. The euro finished their job today. Bottom line is euro is obviously bearish right now. The euro's bearish. I want to be a seller. Anytime the market is this bearish, I want to be a seller up here. But there's one big problem right now, and that is that trend line coming in. Now, you know what I'm going to say. If you watch this newsletter, you already know what I'm going to say right now. That trend line is a dagger in the heart for these sellers because they've really got to thread the needle right now. I'm going to talk about what I'm looking right now for a buy, because I think right now the chances are pretty good we get a chance to buy this market, going back to that big round number, back to that retest the high. But at the same time, though, we're bearish, so I do have to be aware of what I can use to sell this market as well, because we haven't completed that big retest of that low down around 14,000, which is what we were expecting if this market collapsed. So buying or selling, I've got a great plan here, but I'm thinking long here on the euro. I'm thinking long here on the gold. I think I'm going to stick to the buy side of the Nasdaq. I'm pretty sure the Nasdaq's along right now. S&P's along, and of course the oil here, right, pulling that sideways, right, that sideways chop on us right now. I got a great plan on that oil as well. Guys, I'm going to dig into all of these charts in a lot more detail here in just a moment. Before we jump in though, I want to make sure you never miss another great video here at School of Trade. We publish every day on our YouTube channel and our blog here at Sideways Markets. I want to make sure you always get the good stuff, and to make sure you never miss a video, join our mailing list. All I need is your name, your email address, and then hit that subscribe now button. Once you join the mailing list, make sure you check your inbox, because I'm going to send you a welcome email with a lot of goodies in there so you can get the most out of your time together with us every evening on this newsletter. So don't delay. Make sure you never miss a video by joining our mailing list. That way you'll get an email from me every evening when this nightly newsletter goes live. And then don't forget, tomorrow morning, 8 o'clock Eastern time, we'll be in our trade room as we are every morning. If I don't see you there with me, the next best thing is to grab all the charts that I'll be using tomorrow. You can download all of those charts by following those links below the video tonight on our blog. So grab all the charts that I'll be using for tomorrow's trading session, right? They're available right below this video here on the blog. And while you're down below the video tonight, don't forget, if you have any questions, comments, concerns, any feedback, anything you'd like to see me change about this newsletter, I am always listening, guys. I value your feedback, and any feedback you give me is always right listened to. So post your feedback, post your questions in the comment section below, and while you're down there, hit that thumbs up button if you love this nightly newsletter every evening, and make sure you subscribe to our YouTube channel so you get all the good stuff right every week here at School of Trade. And don't forget, if you need more help, if you need any help along the way, please don't be afraid to pick up that telephone. I realize that most websites these days are all automated robots and all call centers, right? But I'm old school. We are a small family-run business here. My corporate headquarters in Los Angeles. My wife Megan and I are always here to answer all your questions, whether it be charts, data, brokerage, whatever your questions are. I want to make sure you get the real truth that you need. So pick up the phone or use that toll-free phone number in the upper right-hand corner. I look forward to helping you out every step of the process. All right, it's time to get to work, though. It's time to get to work, right? Let's roll those sleeves up and let's see what we got going on for tomorrow. Tomorrow's Friday. Tomorrow is pretty much the third Friday of the month. I know the first day of the month was a Friday, but tomorrow is pretty much the third Friday of the month. And really what that means in the month of March is we've got taxes due here soon. We've got spring breakers. And after the FOMC announcement on Wednesday and the craziness we saw today, I'm expecting tomorrow to be a relatively calm, low volume environment. almost a little bit of exhaustion after such a busy week in the markets. Again, I realize it's technically the fourth Friday of the month, but I can almost guarantee you there'll be a lot of people getting out of town early, getting some spring break going here. And of course, Friday afternoon, right, will definitely be pretty quiet tomorrow. The bottom line is be aware of that. Fridays are always a bit of a question mark anyways. Early in, early out. On a Friday morning, you really got to have a good reason to be trading after 11 o'clock Eastern time. So keep your eyes on the clock tomorrow. Now, what's our big news tomorrow morning? Existing home sales, 10 o'clock Eastern time. Now, it's no secret on this newsletter. I've been telling you guys this for a long time. We have consistently in the year 2019, this may not be forever, but in 2019, we have seen consistently some remarkable opportunities between that 9:45 to 10:45 hour. A little bit after the opening bell on the NYSE, into that 10 o'clock hour. That seems to be where we're getting most of the opportunities. And tomorrow looks like, when you combine that with that existing home sales number, it looks like we're going to see a little bit more of the same tomorrow. So don't forget, get to it early tomorrow morning, right? That 8 o'clock to 9 o'clock hour is always good for a couple setups. But if you can't get them early, stick around for that 10 o'clock to 10:30, 10:45 time, because you'll probably get another round, right, of blowouts there later in the session tomorrow. And again, tomorrow's a Friday morning, right? So early in, early out. And don't forget, we're in our trade room every morning, 8 o'clock Eastern time, and I look forward to seeing you there, right there with me. So 10 o'clock Eastern time tomorrow, that's the big news for tomorrow, right? We, of course, will front row seat in the trade room tomorrow morning, opening up at 8 o'clock. Let's jump right in. We got crude oil, S&P, Nasdaq, gold, and euro on the radar here tonight. Now, jumping into oil here first. The first thing I always do whenever I open up a new chart is I ask myself, what type of market conditions are we dealing with? The markets only move in two different ways. They're either range bound or they're trending, and it's pretty easy to see right now on oil, we are range bound, right? Double tops, double bottoms. You could even go as far as to say higher lows and lower highs, but this is a trading range environment. Now, once I know we have a range-bound market, I look to see if we have a directional bias. In this case, we do have a directional bias. The market is bullish before we went into that trading range. There won't always be a directional bias. Sometimes the markets are just sideways. This one has a clear directional bias for those bulls. Anytime we see a bull market, before we go into a trading range, I always know the best opportunities are going to come below the trading range. And of course, how do I know where to look for those buying opportunities? I'm glad you asked. I find the range. I copy and paste it down. That creates support. I copy and paste it down. That creates support. Heck, I do the same thing to the upside, right? Copy and paste it up. That creates resistance. Copy and paste it up, right? That creates resistance. So I know the market's bullish. I know we have a range. I know that tells me to look to buy below the low of that range, and I know below the range, I've got key levels of support here at 59.57, right, and 59.24. Knowing that this is where I want to look for those buying opportunities, what type of patterns could I find down there? What do you think? What do you think are the best types of patterns here if we try to go below that trading range? Let's get these things out of the way here right now. If I can get a nice deep pullback, here, we typically see one of three different buy patterns. Here's two of them I'm looking for here tomorrow. First, strong move down. Now, what would a strong move down do, right, to an uneducated, a rookie trader, right, someone who doesn't have much time in the business just yet? What would a rookie trader do in that situation? They would probably look at this as a trending market, right, and try to sell that pullback. Right? The bears will come in and they'll try to sell that pullback. The weak hands in the market, or what's called, unfortunately, right, the dumb money, right? The dumb money in the market is going to see this as being a breakout opportunity. Breakout patterns are really common for rookie traders. I learned them when I was a rookie. I'm sure you did as well. And we probably still have the scars, right? And the losses to prove it. The bottom line is most breakouts fail. And so once I see those sellers trying to sell off that pullback, now I know exactly where their stop losses are. And I can go looking for those buy opportunities now right into where those stops are going to be. So anticipate now, right? We run lower outside that range. Let those sellers try to sell that pullback, right? Let them wrap that rope right around their neck. Then we know exactly where their stops are, and we're looking to buy right into their stops, right? We call this a failure setup, right? A failure setup coming off of that low. The best opportunities in a range-bound market are to fade the breakouts, or to look for breakout failures, right? Failure pattern back up. Now, after we get that failure pattern, oftentimes this market will pull right back here for us and give us one more shot to buy off of that low. That's a pullback pattern. We call this a breakout pullback, right? Breaks up, pulls back, and into that range again. There are two patterns I'm watching for here. Again, it's not the pattern, so to speak, it's the location, right? Get down below that range in those support areas. That's where you want to be looking in. Now, I mentioned three patterns. Here's one more to look for. Down, up, down. Draw the trend line over. We call these a two-legged pullback. One leg, two leg. Now, up and over, up and over. Called a two-legged pullback, or that 2LP. Okay? Very simple, very similar, right, to the move lower, the pullback, right, and the failure, right? Very similar to that pattern, but you'll notice it's got a key difference. The key difference is there's that trend line coming down. Always watching that falling resistance trend line, right, and looking for the buy on the opposite side. So there are three buy patterns as we go lower. Now, what about as we go higher? Could we buy this as we go higher? Could we do a breakout? What would a breakout pattern look like here? The first rule for a breakout is strength. We've got to get a strong move, right? It's got to be blistering strong. None of this crap, right? None of this like, oh, whoops, sorry, didn't mean it. No, I'm talking big, strong breakup, right? This thing has to be like, whoa, right? One of those lean on your keyboard type of moves. You know what I'm talking about, right? The market moves so fast, right? It's a kind of a neck-breaking move, right? And you kind of lean on your keyboard because you're going, holy Christmas, look at that breakout. That's the move you want to see. You want to see that lean on keyboard, like that whoa type of breakout. Now, once you've got that break higher, and again, that break higher is all about personality, now we've got to assume, this is where we use that vitamin E, right? Vitamin empathy, right? The secret weapon for traders. We assume now the sellers are going to try to sell this back in, right? It's a range, for crying out loud. The bears are going to try. Now, how many times do you think those sellers will try to sell it before they give up and become buyers? Probably twice. In my experience, let those bears try to sell it once. You'll usually see them come in right above that high and sell it again. But after they show their cards, then after we see them try twice, now we know they're fully committed. Now we know the rookie bears are in, right? The more experienced bears are in, and now we know everybody's stops are sitting right above that high, and that's exactly now where we're buying into. Let those bears try once, let them try twice, and we're buying into their stops right from there. Very easy breakout, but it starts with what? That whoa, right? That nice big break through the high of that range. Okay, we don't want to buy the breakout because a lot of times it'll pull back and go right back in. Which reminds me, how do we sell this market tomorrow? What would a seller's market look like? Well, let's play going higher here. If we go higher here, right, how do we sell it back in? It's a range, right? Buy low, sell high. It's a bull range, though. It's not a bear range. If it was a bear market, right, if this was a bear market coming down into that range, I would look for the move up, the buyers, and the failure back down in. If it was a bear market into the range, we look for that up, buyers fail, and drop it back in. Just like we look for that down, sellers try, fail, and back up in. Same basic pattern. However, to sell this market tomorrow, we've got to get a little bit more patient Strong move up, let the buyers try once. Let them try twice. Once they try once, once they try twice, we look for that what we call a nested failure pattern, right? So two types of failure patterns. Going with the trend is very simple. Let it go lower, let them try to sell it, buy into their failure. Going against the trend, wait, 1, 2, we call that a nested failure pattern. All right, so we can sell off these highs. We just got to make sure we wait patient for those buyers to exhaust themselves. All right, now I want to teach you a lot more about this, but I got to keep going, right? I've got so much I want to share with you about my favorite entry patterns, how to trade ranges, and you know what? I have a whole section dedicated to range-bound markets in my free trading course. Let's do this. I'm going to drop a link in the upper right-hand corner. I'll also put a big red button below the video tonight on our blog. Grab that free trading course. It'll be the best investment in your time you've ever made as a new trader. It'll teach you all about our 3-step strategy and, most importantly, the best ways to capitalize on these range-bound markets. Because I'm going to keep moving, right? Got a good plan here on the oil, right? Last but not least, though, how do we turn bearish? How does the market turn bearish here? We know how to sell it, right? How do we turn bearish? 1, 2, 3, breakout. Strong move down, pull back to the moving average, right? And then strong move off. 1, 2, 3, breakout. Mark that low, mark that new channel, sell the high of that channel. Where's our target? Target is back down, right, to those pre-FOMC lows at 58.56. Okay, so now you know what to look. Now you know what to look for a reversal, right? A 1, 2, 3 strong move down. Don't try to predict that reversal if it just pulls back, because you know what's going to happen, right? It'll fail and go right back in, right? Guys like me are waiting to buy that pullback. All right, oil is looking pretty good here. Over to the E-minis. I've got the S&P and I've got the Nasdaq. Now, it's a little bit difficult right now because there's not much we can do with this, right? This is a pretty simple idea here. We have on both the E-mini and the S&P and the Nasdaq a very strong move, right? Almost a straight line here today on that short covering rally from yesterday. Now, with that said, anytime we see a market that makes this much movement pretty much straight up, a lot of times the following day becomes a range. So we're keeping an eye on that trading range. Now, we've talked briefly about these ranges, right? Find those range expansion levels, find those key levels of support down here, and then look for those failures, right? Look for those failures as the market tries to go lower. Now, at the same time, I'm also using a prior swing here to find a hidden channel. Right? I'm also using some prior levels over here to help me identify some additional key levels of support. So the bottom line is this market's probably going to go sideways a bit here. We need to get it to pull back here for us so we can buy at some key levels. Okay, so we get that strong move up, right? Goes into a trading range. It's a very small trading range. It may widen out, right? It may go into a wider range here tomorrow. But the moral of the story is, though, is we really want to see this market try to pull back. We want to see those sellers get into trouble, right? Try to sell those pullbacks. It'll look very similar. This was very small, obviously. We go below the moving average. The bears try to sell it, right? And of course, they fail, and the market runs back up. We're looking for something very similar to that tomorrow morning. Now, it might not come easily tomorrow, right? We may end up sitting inside this trading range up here, right, for quite some time. It's a very sharp bull market. If the buyers aren't taking profit and nobody dares to sell this market, it could keep going sideways around this 28.62 area for quite some time. So be patient on this, right? We're right up at a measured move. We're right up around that big, right, that big high from earlier on in the month, right? So it's important that we don't go pushing this too hard, trying to buy high right now. With that said, though, I'm drawing off those highs, bring it down to that low, and I really like the low of this hidden channel. So let's dive into this a little bit closer here now, right? As we go higher here, it's a lot like oil, right? Strong move up into a trading range. The bull market tells me I want to buy. I want to buy where? I want to buy below the range. Where below the range? How about the range expansion? use the range itself, copy and paste it down, right? That range expansion level looks great. Do it again. Whenever I have a real small range, like it's a very narrow range, right? It's a very narrow range. Anytime that range is this small like this, I like to go with 2 deviations, 1 and 2, 2 expansions, right? 1 and 2. And you'll notice that lines up nicely with that big, right? With that big hidden channel, right? That we drew before. Okay, so that's a great spot, looking for those buys there. And then if we go higher, right, if we go higher here, I've got some other areas of resistance overhead that I'll be looking for those sellers up here so I know when to buy into their failure. So this whole thing is pretty much setting up here as we need it to. Now all we need to do is stay patient on this. We've got the trading range with that bull bias. Stay patient. If we go sideways here for a while, stay patient with it and wait for that nice move down. Let those sellers try to sell that pullback. We'll look to buy into their failure. Let's do this a little bit easier here, right? Get that pullback. Hopefully we get a nice deep pullback down inside that battle zone. Get that moving average coming over. Let those sellers try to sell off that moving average. Grab that high. That's where our stops are going to be. We look to buy into those stops. Very similar to what we talked about on oil. There's your failure pattern. Moving average comes over, right, into a pullback pattern. Okay, so failure, right, failure into a pullback. Or if we get that 2-legged pullback, 1 leg, 2 leg, draw that trend line down, get up and over it, and then go. Right? That is also a valid setup, right, as we go as well. And again, you'll learn a whole lot more about the 2-legged pullbacks, the failure patterns inside that free trading course that I mentioned earlier. Hardest part's going to be if the market sits here and goes sideways, because we really don't want to buy high. We've got to kind of wait here right now for that pullback. Let them pull back, let them try to sell it, and we'll buy into those stop losses for that move going higher. How do we go higher though? Same basic idea as we talk about on oil, right? I'm not looking for this little breakout here. I'm looking for a break and a run, right? It's got to really impress me on that breakout. Once it breaks and runs, then I look for the 1 and the 2. I look for those sellers to try selling into it. Once I see those bears trying once, usually what happens is the bears will try once. If they're not successful going back into the range, they'll try just a little bit higher there because, of course, bears always want to sell at a higher price, right? So you look for that higher high on it, wait for those bears to try twice, and then, of course, nice strong signal candle, and we're buying right into those stop losses. We saw a great example of that on the S&P as the market turned, right, this morning. So we know what the market looks like for a breakout. We know what it looks like here for a pullback. How would we sell this market right now? What do you think? Well, a tremendous amount of bullishness. So if we want to be a seller, we got to do it carefully. Strong move up. How many tries do you think those buyers will give it before they give up? 1 try? They're going to try more than once. Yeah, they'll try twice. And once I see those buyers, right, pull back, you got the 38.2 buyers coming in. Oh, they fail. Okay, how about the 50% buyers there, right? 50% golden ratio buyers, they come in and buy it. They fail, right? Once I see those, right, 382s, once I see my golden ratios, once I see all those buyers fully committed, and then I get that nice signal candle. Yeah, now the pump is primed now for all those buyers to let this thing go here, get either long positions, right, and we can sell it back down again. Remember, this is the same basic failure pattern, except it requires one more step because it goes against the overall market's momentum. Now, I feel kind of foolish even talking about this right now, but what would a bear market look like? Well, honestly, I think to even think about being a seller on this thing, besides selling off the high, we've got to get through this battle zone right here. I would imagine you've got a whole ton of buyers waiting down around that 28.45. So in order for us to get those buyers out of the way, we're going to have to see that 1, 2, and 3. It's going to have to really punch through that battle zone because, even if we do see a strong 1, 2 go back down, I just don't think that's going to be enough to stop this. We'll probably see at that point a nested buy going right back up again. So it's really got to be a strong move into the battle zone, hold the pullback, and run through it. At this point, it feels almost impossible to even think about this market doing that, but might I remind you, this was looking pretty much impossible to go higher, right, less than 24 hours ago. So the neck breaker, right, on the E-minis right now could easily come back tomorrow as well. The bottom line is I want to see a strong move down, a pullback through the battle zone now. Once I've got that, then I can mark up that low. That creates key resistance. Then I can find my hidden channel, draw that in, and then I can look to sell. There we go. I can sell right up off that channel high. How far will that market go at that point? I think it's a little bit unrealistic to say it'll go all the way back down to its low. But if we look closely here, we've got that kind of trading range right about there. So if we do get that bear market, I would say 28.35 is probably where we're going to see a nice safe bet there, right, for your target. I find it very unrealistic to think we're going to go all the way back down to that 28.13, not on a Friday, kind of the third week of the month. I just don't see it going to happen tomorrow. But the reality is we may see a very, very sharp pullback that may turn into a reversal, and now you know exactly, right, how I plan to trade it. S&P is looking pretty good. How about some Nasdaq here? Let's grab some Nasdaq. So Nasdaq is very similar, right? Big, strong move up. There's no doubt about it. Everybody knows we're bullish right now. And I don't think we're ready for that all-time high talk just yet. I see a lot of people posting online right now about, we're going back to all-time highs. Let's not go too crazy here yet. We've seen a lot of these head fakes here. There's a lot of this very impulsive movement going on right now with the Fed flip-flopping back and forth regarding interest rates and quantitative easing and all that garbage. So we know this could easily turn, right? Nothing's really safe right now, so you really got to play what you're seeing. The bottom line is it's a very strong move up. It looks to me like we have a spike in channel here right now. It's probably going to be a range tomorrow, right? If it is a spike in channel now, I mean, I wouldn't hold your breath. Anytime we see a strong move like this in one direction, you're pretty much, it's not a guarantee. Nothing's guaranteed in this world, but it's a very, very good likelihood we're going to see this market turn sideways. Again, in a bull market into a range, I want to buy below that range. And of course, with that, I'm also drawing in off those highs, bring it down to that low, and that's a beautiful spot right there to look for that pullback. So it's kind of, a little bit of a weird way to draw that channel right now, but I'm really at this point just trying to find any key levels of support that I can use here. So again, very much like the oil and the S&P, we had a strong move up. I'm going to call it a trading range. You're more than welcome to call it a spike in channel. It doesn't really matter, to be honest with you, because right now a spike in channel pattern always tells me look for that deep pullback, right? A trading range always tells me look for that deep pullback failure. So both of these, whether you want to call it a spike in channel or you want to call this a trading range, probably going to be a trading range. Right now it looks like a spike in channel, but knowing that we have that trading range, right, copy and paste it down, key support 1, copy and paste it down, key support 2, and then honestly, I think the key level here for the NASDAQ here, and this honestly could be a major line in the sand for maybe the foreseeable future in March, right? 74.85, 74.86. This is a key level of resistance that we saw, right, going into lunch. We broke free of it, and I can almost guarantee me a lot of people out there that went off to lunch, they came back from lunch and they said, what the heck happened here, right? It broke out. And I'll bet there's going to be a lot of buyers right now waiting down here, right? They went off and got their foot long, right, for lunch this afternoon and missed that breakout. So I would imagine a lot of buyers are waiting down there, 74.85 and change. So really, I think the hardest part is just getting a pullback. That'll be the hardest part here tomorrow. If we end up going sideways here, keep your eyes open on this to be a sideways range, right? If we do end up going sideways, look for that nice deep pullback. Look for those sellers to try a second time, right? And then of course we'll know where those stops are, right? As we try to get long. So look for that, right? Look for that market to pull back. Look for the moving average now to come over. Look for those sellers to try to sell off of the moving average. Sometimes these are very, very subtle. Sometimes they look like this where they'll go down, barely pull back, right? Barely you'll see it and snap right back higher here. So you'll see lots of different variations of those failures. But you know my old saying, right? If it looks like a duck and it moves like a duck, it's probably gonna act like a duck. So as long as we get the pullback off of that high, as long as we see some evidence here, and I personally don't use volume, I don't use any indicators to tell me that sellers are there. I just use the candlesticks. I don't think you need to have order flow and volume profiling and all the stuff that you see cluttering up most rookie. And you can always kind of tell an inexperienced trader, right? Because they get a million indicators all over it. You really don't need all the tools. Just look for that, right? Look for that obvious sign. It's usually going to be a red candle coming off of it, right? Look for those bears trying to sell off of that moving average. Once we get those sellers clear coming off the moving average, now we know where their stops are. Again, I don't need any special indicators for this. I need a moving average. I need some Japanese candlesticks. They all work great, right? You don't need extra tools to overcomplicate this unless you're trying to sell those tools. And then of course, right, they always work, right? It's kind of funny because that's pretty much the only folks who use those tools anymore are the people who are trying to sell them to us, right, on YouTube. The bottom line is though, no tools needed on this. Get a moving average. Wait for them to come back and pull back to that moving average. Let those bears to the sell off it. Then we know exactly where stops are, right? We can buy into those stops. Don't chase after it up here. Remember, don't chase after it. Wait for that pullback. That's your follow-up, right? That's your follow-up from there, right? So try failure pattern. I know this is repeating myself here. Failure pattern, right? Into that pullback pattern. Now, it's also worth mentioning here as well, right, if this market really takes a nosedive, right? If it really takes a nosedive here, right? If this thing all just completely falls apart and makes a nosedive down here all the way down to that 74.85, if we see a tremendous move lower here, what I'll do is I'll look to adapt to that extra momentum, and now I'll look for that nested variation of the failure, right? So 1, 2, and then up from there. I'll let the bears try twice. So you want to think of it this way, right? A shallow pullback, it's a failure into a pullback back up. If this thing rips lower here on profit taking or some news overnight, then I shift gears a little bit. I get more conservative. I'll let the bears try once, bears try twice, and we buy up from there, right? It's that slight variation, right, in the way the market pulls back. We'll talk a lot more about that, obviously, in our members course, as well as in that free course that I mentioned earlier. So grab that link in the upper right-hand corner. Also, too, right, big, deep pullbacks, one leg, two leg. Don't be surprised if we see a two-legged pullback, up and over we go from there, right? Buying off that two-legged pullback off that trend line. Stay out of the middle, right? Stay out of that trading range. 1, 2, failure back up. What's the breakout look like, right? What's that breakout look like? How do we break free of this thing? Breakout, strong move up. 1, 2. Remember, let those bears try once. Watch for those bears to try a higher price here, higher high, and then buying into their failure from there, right? That's the trick. The trick is let the bears sell it once. Okay, you're not looking to buy into that failure because they're going to try it again most likely. Wait for that second time, and you'll see after that second time the bears try, the whole market will just fly higher because everybody knows the gig is up, right? We're breaking free of that range. All right, guys? So that's the breakout pattern we're looking for. And then, of course, like I mentioned before on the S&P, unless we can get below this 85 3/4 here, even the sharpest pullback here, I'm still looking for that move going right back up here. So be very careful trying to call tops on this NASDAQ or any of those E-minis right now. Now, moving forward here now over to the yellow metal, the gold market, the GC. This is the 419 contract on gold. The first thing I always ask myself whenever I look at a chart is what type of market we're dealing with. Is it a range-bound market or is it a trending market? And honestly, in this condition, it was a little bit difficult to tell. It really was. The bottom line is we see it go up into what looks to be a range right there. It looks like that's a range right there. But then we go breaking out to a higher high. This is a spiking channel. They both pretty much tell us the same darn thing, right? Spike and channel says deep pullback, back up, right? Trading range tells us deep pullback, right back up, right? But then you get this big, strong move down here. And that big, strong move down is no joke, right? That's not playing around. That is that's a very strong bear momentum. So whatever the bulls had going higher here almost completely evaporated. I say almost because look what didn't happen. They didn't go back and take back the entire FOMC move. That might just be the biggest clue. It's not what did happen in the chart because, well, let's put it this way. There's probably a shorter list of what didn't happen because everything happened here. We saw a channel, we saw a reversal, we saw a trading range, right? I mean, heck, there's everything on this darn chart right now. What didn't happen, right? We didn't get that retest of that low. Right? We didn't get that retest of that low. And because this market made such a great attempt to go all the way back, right, and stop out all those buyers who were in from the FOMC announcement, those buyers are now still holding their positions right now. And that's a very, right, important piece of this puzzle. We'll talk more about that in a moment here. What didn't happen on this gold is the biggest clue for me right now that heck with that bearish momentum, I think we're going right back up to retest that high. This now looks like just a pullback in that bear market. Okay, now let's go one step further. Okay, we have a strong move up into a trading range. Now I know. This thing got clobbered, right? It went right through that range. Okay, however, if these sellers can't hold this, where's it going to go? Right back up to that range. Spike and channel. What do we know about spike and channels? We know from experience that spike and channels love to pull back right into the deepest part of that channel, right? You can see it broken, it failed. But you can also see they failed to get what they're looking for, right? They failed to actually get what they were trying to accomplish. That failure now tells me, right, those buyers are going to want to go all the way back up to retest those highs. So we've got a couple really important levels up here, up around that 1318 to 1320 area right there on the gold. I'm looking for a market, I'm looking for opportunity to go right back up with them. But wait a second, we have that bear momentum. What does that tell me? It tells me that if I was to look at this, right, put a little Fibonacci level on here, what do you think is going to happen? Yeah, 38.2 levels, 50% levels, 61.8% levels. You're going to have sellers coming in trying to spoil the fun and run me out of my trades. I want to be a buyer, but I have to respect the market's momentum in the short term. That's a very strong bear move lower. So what do we look for here? I'm looking for the sellers to try a couple times. I'm expecting that as we go into this battle zone, I'm expecting to see these bears try once. Do you think they're going to give up after that one try? Probably not. They're going to probably try again. And if I can get that second try now I've got those bears where I want them. Now they're fully committed. And if they fail, I can now be confident buying into that failure for a nice short covering rally back up to retest the high. If I could really predict the future, what I would really love to see is I'd love to see that crown reversal. Here's how it works. We go up, right? Crown reversal. We go up, bears try once. We go higher, bears try twice. We make that trap low, and we go up from there. It's the same basic pattern, except if we can get a 1 try for the bears, a 2 try for the bears, and get below that low, now you've got the Fibonacci sellers trying once, the Fib sellers trying twice, and now you've got the breakout sellers trying to sell it. Everybody's loaded up. That rope is wrapped nicely around their neck. And once we see that nice strong signal, bingo, we're buying right into those stop losses right as we go. So looking for those bears to try a couple times so I can buy right into that stop. Now, sometimes we don't get that deep pullback, and sometimes it goes 1, 2, and go. If that's the case, that's fine. Watch that prior swing and look for that pullback back to that prior swing. That's your sweet spot. Okay, so if it doesn't give us the 1, 2, and then trap, or the 1, 2, and go, sometimes what'll happen is it'll really run. If it really runs, don't chase after it. mark that low, and that's where you want to look for that buy, right? So you're not chasing after that move as it goes. As you can see, I'm always trying to give those sellers, those counter trend sellers right now, I want to give them the benefit of the doubt, right? And make them prove to me that they're in it before I go buying into those stops. Now, what if I'm wrong, right? What if I'm wrong? You could be shaking your head right now going, man, you're crazy, Joe. You're crazy. This is a bear market. We're going back down to that big round number at 1,300, right? How do we do that now? Well, we have a two-legged pullback. Trend line's coming up, right? Two-legged pullback. We go up, we go over, and dump it in from there. Nice strong red candle, up and over from there. Okay? That will likely be probably the only option you have, right, to get that trade short, because if it doesn't, it's going to probably run, right, back up. So here's what you want to think about here. Draw that trend line up, right? Draw that trend line up. Let's make that a different color here. We get a two-legged pullback, right, into a failure, into a pullback from there. Here are three sell setups. One, of course, starts off the underbelly of that trend line. Two is the failure below that pullback. And three is the breakout pullback as we go lower. Okay, and again, if this thing starts to whoop right back up, we know don't chase after it. Wait for that pullback. And again, where's our targets? Our targets are right back up, right, to retest those highs. Okay, don't be afraid too. If this thing starts ripping, right, if it starts ripping higher here, don't be afraid too to look for that trap, right? If it really starts ripping higher here, if this thing really starts getting on its horse, short covering rally, look for any trap you can get your hands on. Okay, it's a lot like we saw back here, right? It goes ripping higher here, right? You don't chase after it. What do? You wait for a trap, right? Wait for a trap. That's where professionals are waiting. Professionals know they don't want to buy high. When a market rips higher, they don't want to get caught buying the high, because then it requires this huge amount of risk, and you don't know how much further will go, right, to get a good reward. The risk-reward ratio is horrible if you chase after a move. If you wait to buy a trap, it gives you a much better risk-reward ratio. And of course, when you get a good risk-reward ratio, when you risk small to earn large, you attract all professional traders in there with you. And when you're trading right elbow to elbow with other professionals, you're usually going to be on the right track. So that's the way I'm looking for the buy and for the sell. And then one last thing here, guys. One last thing here. I can't help myself. If you draw that range, there's your halfway point right there. I don't think this is the case tomorrow, but if we happen to go sideways here, if we happen to get all messed up in here, don't be surprised if it goes into a range, right? Trend line's coming down, trend line's coming up. All right, so I don't think that's the case for tomorrow. It's a Friday. It's a third week of the month, so it might be, like I mentioned, tomorrow could be a relatively quiet day. But from what we've seen so far, the last 2 days here, I'm expecting to have some fireworks into the end of the day tomorrow here, or into the end of the week tomorrow, I should say. Right, not necessarily the end of the day tomorrow, end of the week tomorrow, but I'm also keep my eyes on this because it's pretty easy to see here. We're right about the middle, right, of that big move up, that big move down. But again, I think the fact that they couldn't take back that whole entire move, I think that just that is the get out of jail free card for the buyers right now, and it really puts those sellers in a bad spot. All right, let's keep going. Hold on to that thought about the didn't get it done on the gold, because you can see the euro right now, and the euro got what the gold was trying to get accomplished, didn't it? Right? It's not what did happen on the gold, it's what didn't happen. Well, it did happen on the euro. We saw that big blast up from the FOMC, and then for whatever reason, right, market turns and runs right back down and buries it. You can see they got what they came for. Right? They got it. In fact, they got it. They got two of them, and they buried it in the backyard. Right? They got what they were looking for. So we know the Bears got what they were, basically what they were hunting for there. That gives the Bears the complete edge right now. And it's really what tells me gold is looking good for that buy going back up. So now, what type of day are we dealing with right now? Is this a range day or is this a trending day on the euro? It's a trending day. Now, in a trending day, I always want to go with the market's momentum. I want to use a channel to sell off the high, and I want to use a measured move. You can see that channel right here. The problem with this channel is it doesn't give me very much to work with here right now. So what I like to do when I don't have a very good channel is I like to go looking for hidden channels. I'll draw a trend line up like that. I'll pop it right on like that. That looks pretty good, right? That looks pretty good up at those highs. Fits pretty well there. Fits pretty well there. So I start off with my typical channel, but that usually isn't a very good way to find good places to sell high, right? I don't want to sell the high of that channel. That's not very good. I want to sell a much higher price. So I look left, I find another swing, I bring it up, and wow, look at that. Fits great. So now I've got a pretty good idea of where I can start looking to sell, right? Up inside that battle zone, up inside what I think to be the top of that hidden channel. Now, of course, I also look for measured moves, right? We got a 1 leg, a 2 leg, a 3 leg. So we're definitely 3 legs down here. This market may go sideways tomorrow. Anytime we see a big move like this, we may end up going sideways the following day, as I mentioned earlier. But we know we're bearish. I want to be a seller. I want to sell the top of that channel. But there's one big problem. I got a higher low. In fact, I have multiple higher lows. I have back-to-back higher lows here coming in. Now, why is it so important? Because you're going to see trend lines now coming in. And what do those trend lines do? Those trend lines are big roadblocks for these sellers to get their retest of the low. What you've got to remember is anytime you see a strong move in one direction, you know we're looking for that pullback and a retest of that low. The objective, the goal, right? The goal is to retest that low. If I have a darn trend line in my way, that is going to be a big roadblock trying to get to that goal, right? Trying to get the mission accomplished. So the best thing we can do on this is we have to get around it. We know we have a trend line coming in. I've got to find a way to get through it, over, and go from there. That's the best and pretty much the only way that I'm going to be able to sell this market tomorrow morning. Now, maybe we get lucky, right? Hopefully we get lucky. Hopefully this market collapses right back down, double bottoms, and then we have a trading range. I mean, in all reality, that would make our job a whole lot easier. So if we can just collapse back down here, bounce off that low, then that gives me a trading range I can work with. I can work with that. Because now that'll get that trend line out of there, right? That trend line will be gone now, and now we can take that trading range, copy and paste it up. This is obviously not drawn to scale, guys. I don't know where the range is right now, so just roll with it on this. But if we do see a range on this, find that overhead level of resistance and use that one. Those buyers try twice, right? Let them try once, let them try twice, and we're trying to sell back down in again. All right, guys? So really there's two ways to do this on the euro. One is up and over. And again, not going to be easy. Not going to be easy at all. And there's not a lot of reward there left over. Or what I hope we get is we go right back down. We bounce off that low. That creates the range. Then we know where our level of resistance is overhead. We look for those buyers to try to buy it up. We let them try to buy it. We know where their stops are. And we sell right into those stops as we go. Okay, so those are the two opportunities here now to be a seller that I see happening right now, right on this euro. What I really want to do though is see if I can get a buy chance here, right? How would we look to be a buyer? Well, first of all, we've got to remember where the sellers are trying to sell. They're going to try to sell that reversal line, sell that trap high, sell the top of that channel. The sellers are going to come in and try to sell that battle zone. Now, knowing that, I'm expecting those sellers to try once, try twice, and then I can start being a buyer. Same basic pattern, right? I don't want to just buy it because I've got to respect these bears. I'm expecting to see some sellers coming in once at the top of that channel. I would very much expect to see sellers trying again above that high. Once we see those bears trying and failing twice, now they're fully committed. There's no more bullets left, and now I can buy right into those stops. If I really get my way tomorrow, we'll see something like this, where that trend line comes up, strong move up, 1, 2, trap and go. right? If you hear a loud noise from Los Angeles, California tomorrow morning about 8:45 in the morning, that's me hitting that trap low, right? I'll be hooting and hollering if we get that pattern tomorrow. That'll be a doozy. Again, same basic idea. We're using that support trend line as support. We're taking shelter of the sellers, trying once, trying twice, and we're getting a trap entry long because that trap will allow us to buy when we've got the sellers, 1, 2, 3 types of sellers now roped in. Even the breakout sellers, right, are roped in at that point. So those are two patterns as we go higher here. Don't forget, if it starts ripping higher here, right? If it rips higher here, okay, look for those traps, right? Easy come, easy go. If it dumps like this, it can easily go right back up again. If it does go right back up again and it rips, right? No deep pullbacks, wait for a trap. Don't chase it. And then what if it goes lower? Could I buy it if it goes lower? You could. Wait for it to go lower. It's a bear market. We're trying to go back into this range. Look for the 1, look for the 2, because we're bearish at that point, right? You're bearish at that point. So if you want to be a buyer, let those bears try once, let them try twice, and then we're buying into those stops as we go back up, right? Remember, against the momentum, wait for 2 attempts, right? It's all in that free course, right? Grab that free course. You'll learn so much more in that free course. And speaking of the free course just basically scratches the surface of what we teach every evening and every day in our trade room and as part of our video class. And don't forget, right, we're in our trade room every morning, Monday through Friday, 8 o'clock Eastern time. Tonight, the job tonight was just to get it all prepped up for tomorrow. We're going to execute the plan together tomorrow with all of our advanced members. I hope to see you there with me tomorrow, 8 o'clock Eastern time. If not, make sure you check out more information right here on the website. Our beginner, intermediate, and advanced classes are great for every type of trader. Whether you're brand new or you're a grizzled veteran, you'll love our video classes for our membership classes as well as our free trial. I think we have the best free trial in the business. As part of that free trial, I'll send you an invite. Come join me as a guest in the trade room, and I'll also, of course, enroll you in that free trading course. Give me a call, guys, with that toll-free phone number. Use that live support tool on the right-hand side. And please don't forget, right, last day of the week tomorrow, no newsletter on Friday afternoons. The next edition of this newsletter is next Monday evening. So get out of here, get some rest. I'll see you tomorrow morning at the opening bell. If not, same time, same place on Monday evening. If I don't see you guys tomorrow in the markets, have a great, great weekend. If you're traveling for spring break, be safe out there and come back and see us with all your fingers and toes. As always, my name is Joseph. Be well out there, be nice to each other, and be here next time. Adios, amigos. Bye-bye for now.